Hi, my name is George Dagnino. I'm the editor of the Peter Dag portfolio. Everybody, including ourselves in the near term, we see rising inflation. Why? The economy is strengthening, manufacturing somehow is improving, services are strong. So there is a whiff of inflation, and inflation went up to from 2.3, 2.5, now it's 2.9. So there is an upward. Commodities are also strong. So there is an inflationary pressure coming from commodities. However, there are some important trends developing, and I mentioned this in a previous video. And what this video is all about is an update of those indicators plus new evidence coming out. And the question is deflation a possibility or is likely? And this is what the next charts will tell us. How strong is the economy? Well, as I said before, manufacturing has been in a recession, although now is improving, but has been in a recession for at least two years. And so employment now is slowing down. How badly? Well, what this chart is showing is two graphs. The blue one is total employment, non-farm. The green one is manufacturing, the growth in manufacturing employment. And as you can see, has been very, very weak for the last, as I said, 2 years. But let's focus on total employment, the blue line. The blue line has an interesting property that when the growth of of employment falls below 1%, as shown in this red line here, the economy is always in a recession. It happened here, it happened here, it happened here, it happened here, a big one. It happened in 73, 74, big one. This is the recession here, all the way to the 50s. So it's a pretty reliable indicator. Now, I'm not saying let's panic, there is a recession, the world is going to collapse. I'm not saying that. What I'm saying are the conditions, the economic conditions are weak. So weak economic conditions are pretty favorable to lower prices eventually, especially if employment continues to slow down. This is where the tires hit the road, I guess. This is it. It is a very important graph. The blue line is home permits, housing permits, and the red line is housing starts. Now, why are we looking at housing? Housing is a very crucial sector of the economy and is roughly anywhere between 15 and 20%. Keep in mind that manufacturing is already in contraction for 2 years, and that's roughly 10% of the economy. So the fact that housing is weakening as it is now has an important bearing on the economy. In fact, what you see is that every time the blue and red line go up, there is always an economic expansion. When the blue and the red line decline, they lead to a recession. You see, the housing is a leading indicator. They always peaked ahead of a recession every time. Here, 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 and here. So the fact that the housing permits and housing starts are declining is an important sign of economic weakness. But the important thing is why they are declining. Again, every time there is a sharp decline in housing, it's because what has happened before has been an increase in interest rates. The increase in interest rates, of course, during the expansion, inflation rises. So the combination of increasing interest rates and increasing home prices, what happens? It causes people to stop buying and housing peaks. So this peak happens because what has happened before the peak, which is rising inflation and rising interest rates. So the issue is now housing starts are declining. Why? Because people cannot afford it. All the statistics you can show, we can discuss, is that they're saying people cannot afford houses. They are too big, so they have to become smaller, and they have to be much cheaper. So how far will housing will decline? And this is where I have this two big red line. And what is amazing that since the 50s, housing start moved in this big range here. And guess what? Once the peak takes place, consumers, buyers are saying, I got to see much lower interest rates and much lower prices. Until when? Until they cause housing starts and permits to fall at this level. So from here to the red line is going to take quite a bit of time. The way history shows is between 6 and 12 months. So we have another 6 to 12 months of declining home prices. What does that mean? What are the implications? Of course, people are going to be laid off. Raw materials are not going to be purchased. There's going to be an overall impact on the economy and, of course, also on inflation. But above all, on home prices. Home prices will have to decline during this period until this point here, and that will be the point when consumers will finally afford to buy a home, meaning inflation, prices, and interest rates have to decline. And this is just the setting of the problem. As I said, interest rates are already declined. The 2-year yield declined from 4 plus to now below 4%, and mortgage is slowly declining, not really much. What this chart is showing is the red line is housing starts. And as you can see, they're going up, down, up, now they're coming down. What the blue line shows is the growth in home prices. And as you can see, they're exactly the same as the trend of home prices. So what is this chart saying? We said that people cannot afford housing. Housing has to come down big time. In the process, what will happen to prices? They have to come down because people cannot afford it. What this chart shows is the relationship between housing starts and prices. As housing starts decline because people just are waiting for interest rates to decline, prices will also come down. So this is the setting. What we said, the economy is weak, housing has reached a peak, people cannot afford it, housing and permits will have to come down quite a bit for the next 6 to 12 months. In the process, this chart is saying prices will have to come down. What this chart is saying, this is another statistics from the the Fannie Mae. They have a price index, and as you can see, the last 4 months here, prices either they show little change, but in the last 4 months they already started coming down. So prices are already coming down, and they will have to keep on coming down at least for another 6 to 12 months, because this is a very serious correction, as you saw in the charts of housing starts and permits. This has to come down. People cannot afford it until prices come down in a big way, and houses are redesigned to make it much smaller, because during this period, people have lost a huge amount of purchasing power. So houses cannot be mansion. They have to be much, much smaller. So let's see now what is the impact on inflation. But before we get there, there is another two indicators that are very important to look at. This is something I just found out is the green line. But anyway, what the black line is is the Case-Shiller Home Price Index. And as you can see, they have been slowing down quite a bit. And as I showed you in the previous chart, another surveys shows that actually home prices are actually declining. What the green line is something I just found out is very interesting, is the listing price per square foot. And as you can see, leads the trends of home prices. Not only that, but it's released in a more timely fashion, so it tells us what prices will eventually be when they are released, because it's a more timely piece of information. Why do we care? Well, because here notice how the economy slowed down and both came down. Then the price per square feet started rising and followed by increase in home prices. This has started declining, and then after roughly 6-7 months, home prices started slowing down. Now both are slowing down, but what is interesting, the price per square feet now is 0%. So on a year-over-year basis, we already see no change in that index, which leads home prices eventually to keep on going and the slowdown to continue. So what I'm saying is the green line tells us that the black line will continue to declining, meaning that home prices will likely not only get down to zero, but become negative. They already are, but on a year-over-year basis, they will become negative. That's very, very important. Why? That's why we need the next chart. Okay, what this chart shows is what I showed you before, the green line, which is the price per square feet, and this is the Case-Shiller home prices, the growth in home prices, and this is the growth in price per square feet. So as you can see, as I said before, one is close to zero, the other one is coming down quite sharply because of the weakness that is currently happening in the housing sector and will continue to happen. What the blue line represents is the personal consumption expenditures price index. This is the number that the Federal Reserve is watching carefully, and as you can see, as I mentioned before, has been rising a little bit in the last year or so. From a 2.3 now is 2.6. The consumer prices is 2.9. Okay, so now what are these three graphs telling us? Well, as you can see, when the green line, especially the one I really do care, it started rising, inflation follows after several months. When the prices of per square foot declines, then eventually after several months, in fact a year plus, inflation starts declining. Here there has been an uptick in inflation which has followed the increase in home prices during 2023-24. But now both the price per square foot and the Case-Shiller are slowing down quite dramatically. So we have an inflation rate of 2.6, depending on what the personal consumption expenditures price index. If these lines decline for the next 6 to 12 months, which is what the decline that is anticipated for the housing sector, those prices are going to go negative. And when they decline, as it happened here, you see inflation very easily goes down to zero, or possibly, we don't know, could be negative, which is deflation. So there are some very powerful forces at work. And by the way, why inflation is so sensitive to home prices? Because they represent 33% of the basket to compute inflation. So there are some powerful forces coming from the housing sector that will force inflation to decline, and quite possibly in the next 12 months, 6 to 12 months, to be negative, meaning deflation. So what are what I've really been talking about? Well, what I said is there is a housing crisis. Remember, there is a range, and this 100% sure that housing is going to go to the lower range, and to go from where it is now to the lower range, because this has happened for the last 60 years, always up to the upper range, down to the lower range. So why not now? So there's strong probabilities. So there is a housing crisis that is really evolving, with prices to come, housing starts to decline sharply. Home prices, which are very closely correlated to housing starts, will decline together with the weakness in housing. Home prices, I showed you, that lead inflation. So both the price per square feet and home prices will keep on slowing down to level that are likely to lead to much lower inflation, possibly deflation. Meaning that inflation will decline from the current 2.6%, possibly to zero and even lower. And what I'm really, the bottom line is, I'm not saying that there is deflation the next year. However, as things are going now, the likelihood of deflation is increasing dramatically as the home prices and the prices of square feet comes down. Nothing is 100% sure. You know that. However, I'm particularly impressed by two basic trends. The fact that housing for the last 60 years, it just moved within that band. And it's absolutely unreal as far as I'm concerned. Because obviously as inflation rises, as housing is strong, inflation rises, interest rate rise, if people cannot afford it, that's when the housing reaches the upper band. And then people are going to sit down and wait for what? That they can afford it, which is when housing, again, it happened for the last 60 years. This year could be different, but I really doubt it until housing comes down. And then that's when they say, okay, interest rates and inflation has come down to the point where I can afford it. And this is something that we will keep on following very, very closely, because you can imagine what's going to happen to the bond market if this is really the scenario that is going to unfold for the next 6 to 12 months. And in gold, by the way, because gold is very strong when interest rates decline. Well, I want to thank you very much again for following this video. I hope you found it interesting, that the trends have been discussed. They help you plan for your investment. Again, I'm not saying that it's going to happen now or tomorrow or next month. However, what I'm really saying, what I'm trying to suggest, that there is some trends emerging that could have a serious impact on the outlook of inflation and the economy.